Welcome, Tom from BK Nutrition and Ministry of Fitness Gym. And today I'm talking to Ryan Bevan, who works for, is it RBC Accountants?
RBC Vat.
RBC Vat Accountants.
Yeah.
So how I know Ryan is about, I think 6 or 7 years ago, Ryan contacted me at the gym and said, hey, I think we can do something with your VAT. Would you like a conversation? And I was like, yeah, of course, because I hate paying VAT. Like everybody hates paying VAT. So we had a conversation, and I'm going to let him go into the technicals. But in the end, what happened is I was able to reclaim about 11 grand's worth of VAT from my memberships for the last 4 years because of a very legal and very exploitable loophole. However, as Ryan will discuss in this video, the actual criteria for that loophole has changed, and you have to have your systems set up very specifically in order to profit from it. So without further ado, Ryan, can you introduce yourself, what you do?
Yeah, thanks, Tom. Yeah, hi, I'm Ryan Bevan, one of the partners at RBC Vat. So we are a independent VAT specialists dealing with UK and international VAT, GST, customs, advisory and compliance services. So this opportunity here that we worked with Tom and other businesses as well is kind of a sideline to our business and our main practice. It's, as Tom explained, it's a small kind of loophole, if you will, a very legal loophole within the HMRC guidance and the VAT legislation that allows the VAT exemption on qualifying memberships where the structures are in place and there's a qualifying criteria. So we have lots of different clients, international based, UK based, from big and small as well, some internationally recognized companies and brands that you'd recognize, covering all different types of sectors: retail, software, tech, pharma, medical, all sorts. So we are we have accountants in house, but we are tax advisors and VAT specialists in particular.
Cool. And so if you can, now let's just presume everyone here isn't, so I know accountants obviously talk an accountancy talk a lot of the time. So we'll have to, and I always say to my accountant, make sure assume I don't know anything about accounting, absolutely, and just explain it. So if you could explain in very simple terms, what is the loophole that you can exploit in order to reclaim this VAT?
Yeah, absolutely. So it might be helpful if I actually shared,
I need to add you as a host. Give me a second.
Okay.
Make co-host. Okay, you should be able to share your screen now, mate.
Excellent, great. Right. Share screen. There we go. And I want to make that full screen. I just have to remember how to make that full screen. Okay, that'll do. I think
we can all see that.
Yeah, lovely. Cool. Okay. So to begin with, kind of as we probably gathered, the opportunity here is that there is an opportunity to recover overpaid sales VAT or output tax. You might see that reference later on and discussed, but it's all of the VAT that you pay over on your sales and the sales side of your VAT returns. And there's an opportunity here to claw back 4 years. So the statute of limitations for VAT purposes is 4 years. So if your business has been registered for at least 4 years or more, there's an opportunity to look back quite some period to kind of around about, let's say, give or take, January, February 2018. So the first thing that we like to say up front is that it's not a scheme of any kind. We don't really like to deal with schemes and loopholes, usually because they're shut down. You may have seen in the news quite often, there's a lot of celebrities, your Jimmy Carrs, your Gary Linekers, the likes, who have been involved in various tax schemes and tax planning schemes that have been concocted by various advisors to try and basically save on your tax. This is quite the opposite, really. This is taking advantage of the legislation, and the legislation there is kind of highlighted on the screen there within the VAT Act 1994, that is saying that where a VAT registered trader offers credit or finance, that is VAT exempt. You don't have to pay any VAT on it, and that's quite clearly in the legislation. It's been in legislation since 1973. So what we have here is how we have to classify the sales that the business makes and how you separate out the gym membership from an element of finance.
Okay.
So, sorry, was that?
So I was going to say, I think what's to be clear here is, because I did have a question. Someone said that don't we have to be registered with the FSA or FCA? I can't remember which one it is.
Yeah,
now.
the Financial Conduct Authority.
Do we have to be registered because it's saying it's a finance agreement, or credit agreement? Do we have to be registered with the FCA to take advantage of this? No, it's a really good question. It's something that we looked at extensively as well, and we've discussed at length with HMRC and the various audits that we've been through for these claims. The reason this came about is that there was a case put to the European Commission about a person who owned some land, was selling it to a house builder. And the house builder said, well, I will buy your land, but I can't pay for the land until I've sold the houses, or at least sold the houses. So he said, well, so the landowner said, okay, right, I will, if it's going to be, say, €1 million for that land, if I allow you, and I'll sell it to you now, but if I allow you to pay me when the houses are completed or you've sold the first couple, you can pay me €1.2 million. And then so their clever tax advisor said, hang on a minute, how is that any different to getting a mortgage or a bank loan, of which, when that credit facility would be VAT exempt? And so that got put all the way to the top of the European Commission and the Court of Justice, and they agreed and said, actually, you don't have to be a financially regulated institution or body or financial company such as a bank or insurance company to be offering credit. You can, so essentially what it boils down to, if you sell something, whether it be a piece of land or in this case a gym membership, and you make that available on day one, but you are taking payment for those goods or services over a prolonged period of time, you are effectively deferring the payment schedule, then where there is an additional sum that you're charging for the ability to spread that payment, that additional sum is exempt from VAT, just as it would be if you're buying insurance or receiving finance from a bank or a mortgage company. So how this translates into gym memberships is that, because what in the gym industry, most gyms will say, right, it's let's say, take my example, pre-COVID, it was £40 a month, but if you bought a year up front, that'd be £399.
Yeah.
So essentially, you're saving £81.
Correct. Yeah.
So what we're saying there is that it's the same 12 months, but you're paying £40 every month. So that's 480 quid. Or if you buy it all up front, it's £399.
Correct. Yeah.
What we're actually doing there is saying we're giving you an £81 finance charge.
Correct.
On top.
Yeah.
So
yeah, exactly. It's your, Ministry of Fitness. You are allowing, you're giving credit for allowing that member to spread payment, because they might not have the funds up front, they might not want to pay it all out at once. So you are essentially, in the same way that if you're offering a loan or finance, you're doing exactly the same as they would do.
So in that case, then what could be reclaimed is the VAT element of £81, which without my calculator here is about 12 quid, 15 quid, something like that. Yeah,
exactly. And that's there's kind of an example in here, just as you've said there, Tom, that the key tenets of this is you've got member A, so they come into your club and they discuss with your membership team, and they say, okay, I want to sign up. What different payment option, or what different membership plans do you have? So let's say you've got a peak and an off peak and a corporate, etc. And then you go into what the payment terms are. And you can either, as you've said in your example with the £40 or the £399, but in this example here, we have say £100 a month or £1,000 up front. So the difference would be the finance charge. And then historically, in your case, you would have been paying VAT on that additional £81 a year. So what it means is, and how we calculated your VAT recovery, is going and trying to extract from all of those finance charges, identify where all those £81 exists in prior VAT returns, and then extracting that out, pulling out the overpaid VAT on that element, and then making a reclaim for that amount.
Yeah. So let's put that into numbers, because obviously £81 VAT of £81 doesn't sound a lot, and obviously people watching this is going to think that's not worth doing, is it?
Yeah.
So I've just done a quick, on my phone calculator. So the difference, so the VAT, I hope I got this right, is about £13.50 on 81 quid.
Yeah, let me just double check that. Sorry. Yes, £13.50. Yeah, correct.
So okay, so that's not a lot for a year. Now, when we times that by 500 members,
correct, yeah.
That's 6,750 quid
a year. Yeah.
And that's money that you can get back from HMRC over the year.
Yes, yeah, exactly.
Now that is big money, isn't it?
Yeah, and that's when you start going into multi-sites. If anyone has any multi-sites, or if you're talking about 500, 600, 700, even 1,000 members who are on these specific types of plans and membership categories and who have opted to take the monthly payment over the upfront sum, then you're talking about the multiples. So as you say, the actual, when you boil it down to each individual member, it doesn't sound like a lot, but it's that multiple that you get where it really starts to rack up. Yeah. And then of course, that's only the retrospective element. Yeah. And then there's the future that you can benefit, that you're not paying £13.50 per member per year.
Yeah. So okay, so now I think people watching this will be like, okay, this just got interesting, but it's not as clear cut as that, is it? And so, this is what I found with ministry when we did mine, and why, under your advice, we changed the whole business model of membership. So just go into why it does, because a lot of gyms do cash memberships, cash monthlies. Let's just go into that.
So the criteria here, how it should apply, what you need to have is that first off, there you have to be an open membership. So that means that you can't be like a golf club or a tennis club or a private members club where it's only open to certain people. There are different rules for those types of establishments. So it has to be an open membership and available to everyone.
Does this mean that people can go on your website and just join?
Yeah, that too. But also anyone can walk in the door and and say, I'm interested in joining. So it's basically you are open to people, walk-ins, online memberships, that you don't have a limited number of people who can join. Obviously, there are capacities. You don't want to be over capacitated, but I think what we're talking about here is that you don't have a closed membership. You don't have to apply to get in. You don't have to know someone. You can't be blackballed, that type of thing.
Yeah. So just to be, this doesn't take away the gym's ability to say, hold on.
No.
If someone walks in like smashed out their face on alcohol or drugs, and hey, I want to do some lifting. You go, hold on, you can't join in your state. So it doesn't stop the gym saying we reserve the right to refuse anybody. But it's not discriminatory. It's just, does that make sense?
Yeah, exactly. That's that's exactly right. Yeah, you always reserve the right to not admit someone who is under the influence or abusive or whatever it might be.
Yeah.
But so that's the first bit, that it has to be open, and that anyone subject to certain criteria can join. The second is that you have to have a contract.
Yeah.
So that's often where, especially over the last 5 or 6 years, with the trend moving to non-contract memberships, monthly rolling memberships, your low cost, your easy, your buzz, your pure, that type of stuff, where it is join online, pay 20 quid, and you get a PIN code and you can enter. It doesn't apply where there's not a 12-month contract.
Sure. So anybody who's watching this, and this is why I had to change all the contracts at ministry, is because most gyms will have an initial 12-month period, and then it rolls into, oh, you can just cancel at any time. It's a monthly thing. The exemption only applies for that 12-month. Sorry, the recovery only applies for that 12-month contracted period, doesn't it? If they roll into you can't claim anything past that.
Yeah, I mean that's and that's been one of the big changes that we've seen since we've been doing this for 12, 13 years or so. It's one of the big changes. And I kind of come on to the renewal process in a bit, because I think there has been a big change there, and it's kind of limited the ability for some clubs to apply the exemption for year on year as opposed to the first year. It's not that it's not possible, it's just it involves, as you said there, Tom, making changes to your renewal process and your membership T's and C's and the way in which you handle that renewal process.
Okay, cool. So people who pay cash monthlies,
that's okay.
Cannot recover their.
Well, if you can pay in cash, you can do. That's down to the business how you take payment. So it's not the fact that it's paid in cash. It's the fact that there isn't a defined or specified period of time.
Right.
So if we think back to the original case in the Court of Justice, they said you have to be buying the same thing. So in that case, they were buying the land. It's just that they had a schedule of payments over a 12-month period, so that just shifted the number of payments and the value of the payments that were made over those 12 months. So they were still buying, whether they paid it up front for €1 million on day one or 1.2 million euros on day 365. They were still buying that land. So if we apply that to health clubs, the reason why you have to have a 12-month contract is because on day one, when you sign up for the membership, you're buying that membership, and that it's a defined period of time. So on day one, in our example on the screen here, that member A and member B, who are choosing different payment plans, they're still buying a 12-month contract. So you don't have that with the paid monthlies, with non-committal periods or no minimum periods, because you might have member A who signs up for 1 month because they want to get in shape for summer, realize that they can't do it in a month, and they quit. And then you might have member B who's a serious serious gym goer, serious lifter, and will be a member for 5 years. Yeah. So there's no comparative you're not buying the same thing essentially.
Sure. So as long as the actual product you're buying is the same terms, same conditions, just one's a year up front, one's 12 monthly payments, you can reclaim on that.
Yeah, exactly. So you have to have. So if you think about, I might be kind of things might have moved on a bit, but you think back to the traditional, your peak memberships, your off peaks, your corporates. If that is for a 12-month commitment period, and that's in your terms and conditions saying the minimum initial term is for 12 months, if member A chooses to pay his peak membership at £40 a month, but member B decides to pay $399 up front, they're still buying the same thing. You're still buying a peak membership. All that's changed is the way in which you're taking payment, and you're offering member A credit, but member B no credit.
Absolutely. So anybody who's watching this who offers their members a chance to pay monthly with no contract, as in, what I used to do at the gym, I used to charge an extra, it used to be like 42 quid if you didn't want a contract.
Yeah.
You actually can't reclaim. So actually you're doing yourself out of money there, even though it's potentially, it's more advantageous to the customer, and not for you to have that in place. And also you can't predict your cash flow as easily if you do
Correct.
that.
Yeah, exactly. That's if it is monthly, then even if you do, what is allowable is if you have a club who has a peak membership that is for a 12-month commitment period, and then you also have a peak membership at a different price point that is non-contract or rolling. That's okay. You can, but what it means is that you can only apply the exemption for the finance for the 12-month contract, but not the rolling ones at the higher price point. So a business is not all or nothing. A business can offer multiple different payment plans and different contract periods. It's just that the exemption can only be applied where there is this 12-month contract.
Right. So then you said we're going to come on to renewals. So because it's
Yeah.
12 months, then so when it comes up to 12 months, what should businesses be doing to make sure they qualify for the next 12 months to reclaim that, rather than going into a rolling monthly?
Yeah, so this is where it gets really interesting, and there was a case on this in 2014-15 that the revenue actually won, where historically it'd always been that there's been tacit agreement that where you get to the end of the 12 months, and to be honest, you don't want to contact your members, do you? You don't want to phone up Mr. Jones and say, oh, Mr. Jones, your 12-month contract's coming up for expiry. Do you want to sign a new 12-month contract? You don't really want to do that, because Mr. Jones might have only been 3 times during that year.
Yeah.
And he might go, oh, I forgot I was paying that. And he'd want to quit. So the attrition rate for actually contacting essentially dormant members probably would outweigh the benefit for the VAT exemption. Because think about all the people who are quite dormant and not active and regular users, who might, if you contacted them and said you're coming up to renewal and you actually need to now actually physically come into the club or do an e-signature or something on a new membership contract, which replaces your other membership contract, your first one that you signed, the attrition rate on that would be quite high. So what had happened in the past is that that we and other advisors in the industry and health clubs, that there was tacit approval. So it was kind of worded into the membership agreement that in the instance that the initial 12-month contract expires, if the member does not get in touch, we'll take that as kind of tacit approval that you agree to renew for a further, or renew on the same basis that you had initially joined. So essentially you're committing to another 12-month period. And so that kind of ran for a number of years, and it was quite successful. So it meant that you could apply the exemption for as long as the member was a member of the club, assuming they continued to pay by monthly deferred installments rather than choosing to pay in one annual lump sum. Because of course, those ones who were paying in one annual lump sum, you would have to contact those, because those wouldn't automatically continue.
Yeah.
Because you'd want them to commit to paying another £400, £399 up front. So you'd need to go and recommission that credit card or check or whatever it might be. So HMRC really looked at that and think, well, and their lawyers thought, well, don't necessarily agree with that. If we look at what the case says and what the guidance says, strictly what you should be doing, and this is where one of the third criteria really kicks in, is that the member must be made reasonably aware, and that's a technical and a legal term. They must be made reasonably aware that they are committing to a 12-month contract, and that there are 2 payment options, and if they choose to pay in monthly deferred installments, that they will be paying an additional sum over and above what it would cost them to pay in one lump sum. So they need to be aware in some way. Now, if you think about the day one, when they walk into the club, or they email you, or they join online or something or other, they are made reasonably aware, because what you have to have here is some sort of pricing sheet or a sign-up form, or something that is written down and put before the member that shows all the different membership categories and the different payment plans that are available for those membership categories. So you used to lots of clubs have had these rate cards where you'd have printed up with your marketing materials and what services you offer in the gym or the club, and then there would be on the back sheet, usually there's a table showing all the different payment membership categories and payment plans. So HMRC accepted that when a member first joins, that they are made reasonably aware if they have some form of pricing sheet or rate card put in front of them, because anyone can really, if they've got a calculator, if they've got a mobile phone, or they can just do arithmetic and say, well, it's quite simple to say if I'm going to choose to pay monthly, I can do in my head that 12 lots of 100 is more than 1,000. So HMRC accept that you don't have to explicitly call out you will be paying £200 more, and that £200 is an exempt grant of credit. Say, well, you don't have to do that. All the member has to be is reasonably aware that they're paying more.
Yeah, exactly.
So we think about on day one, that's okay, and that's why the first year is kind of like, that's fine. It's upon renewal. If you don't contact them, how do they know? How do they know what the payment plans are? How do they know that the prices haven't gone down? How do they know the prices haven't gone up? So in HMRC's view, and this went to the upper tribunal and in the court, which is the highest court for VAT purposes in the UK, the upper tribunal agreed with HMRC and said, yeah, I think from a legal perspective, on day one of year 2 or year 3 or year 4, they haven't been made reasonably aware. They don't know that they're signing up for another 12 months. They don't know what the payment prices are because they've never been told. So that represented quite a big change to the way in which, or the broadness of how the exemption applies. So what it has done is that it has limited it to the first year only, where there is no outbound kind of contact, or the gym doesn't write to members and say your paid monthly membership is going to expire on the 31st of May. By the way, here's the new prices for the 1st of June 22 through to the 31st of May 2023. Do you wish to sign a new contract? So if members don't do that, or sorry, if clubs don't do that, and the membership automatically rolls over into year 2 or year 3 without any form of interaction with the member, in our view and in the view of HMRC, there's no exempt grant of credit.
Right. So this is really important because we want to be able to reclaim every quarter, don't we, from this thing?
Yeah.
For in the future. So what we've done at Ministry in order to comply with this is that our monthly option is a fixed term and it doesn't roll over. So when you get to like 365 days, the membership stops, and I have a certain amount of member sign-up incentives, such as coaching apps, such as some guest passes, diet plans, all these things which they get when they buy the membership. And we send them an email and says, hi, your year's up. Thanks for being part of Ministry. That's great. Your new member benefits are waiting for you, but you have to re-sign for another year in order to get these things. Here are the prices. Would you like instead to buy the year up front, which will save you 154 quid or whatever it is? And that, I believe, does qualify those criteria.
In my view, I think that's great. I mean, that's pretty innovative. To be honest, Tom, you're one of the few that actually does do that. I mean, that's it's great. I mean, it's what we've been telling clients to do for a long time. Some do it, some don't. But I think, as you've just explained it there, that's what you have to go through. And I think what it boils down to now is that commercial decision for each individual business operator to say, well, how much is it worth to the business for the VAT saving? Or what's my attrition rate going to be? How many people are going to quit if I start contacting them and making them re-sign? And it really comes down to a case-by-case basis. And there's no right or wrong kind of option. It really comes down to a commercial decision about which is the more valuable option for you, which is going to give you the most amount of cash.
Exactly. I mean, what we found is because recently we put the prices up at the gym for because of the cost of living situation, and obviously our costs have gone massively up as well. Yeah. And we kept the yearly at the same, but we increased the monthly because obviously we see more people cancel on the monthly, like the 12 payments option, than we do. If they buy a year up front, they generally tend to stay for the year. And so we put the monthly price option, which obviously gives us more of a gap.
Does.
So potentially more VAT to reclaim if they stay for the 12 months.
That's right.
And what people have actually done, because now the gap between the paying the monthly installments and paying the yearly upfront is now substantial, we've actually seen more people buy the year up front, which has given us a massive boost of cash flow.
Yeah, exactly.
But there's another advantage of making it very open as to the difference between the prices.
Exactly. I mean, that's the exact nail on the head there. You're winning both ways. You've got better cash flow, and because you're banking all of that £400 up front, and you can plan that and you can budget for it. Versus those that don't choose to do that, you're getting a bigger VAT saving. Just on that point here, the usual over the years, we've seen all sorts of different pricing values and price points depending on the different types of memberships and different locations. There's no real cap on what the difference is. So usually, if you think about in marketing terms, it's quite a good marketing ploy to say get 1 month free or get 2 months free if you take the lump sum. Those tend to be the differences. So for example, in the one on the screen, that's essentially 2 months free if you would choose the lump sum. But in reality, we've seen as anything as high as essentially 3 months free, which is a 25% finance. Sometimes we've seen higher in some quite high-end clubs in London. We've seen anything up to kind of like 40 odd %.
And I suppose the thing here is that obviously when it becomes, because people budget their costs, this is something I talk about in my private coaching as well, is that if people see it as a monthly cost, they then start to think of it as their Sky or their phone bill or whatever else. And then here's the thing, is that when obviously something like the cost of living happens, they look at the outgoings per month, and that's the things they start to try and reduce. So by, I suppose, putting it up front that you can save this much by doing it for a year, so right, well, that's the gym membership out of the way. I can still do to my gym, and I can look at my other savings. So there is an advantage to both, I think. And certainly, from our perspective, we've kept the M12, which is the 399, at 399. And people will be like, well, great, I'll just sign up for the year then, because I'm going to be here anyway for, I love the gym, I'm going to be here anyway for this time. Exactly. Whereas people who come in off the street are generally, that you're always going to get people, regardless of how cheap your yearly option is, they're going to want a monthly option. And those people who come in, what we found is the ones who stay generally will translate into the yearly option now, because they've been there and they think, hold on, why am I paying this much? And I'm going to be here anyway. And so you're always going to get people who are going to pay monthly. And as long as the amount of monthly people outweigh the advantage of having the yearlies, then, you're going to be able to claim a decent amount back there.
Exactly. I mean, the way you structure it there is you from a business perspective and business operators perspective, that you've got benefits both ways. So it sounds like the work that we've done there has been pretty beneficial for you, which is great.
Cool. Is there any other consideration? Obviously, I've got to open up for some questions in a second.
Of course.
Is there any other considerations that we need to be aware of, or anything else that?
Yeah, I mean, so far we've only covered the kind of the upside, if you like. The fact that if you do have a 12-month membership and you do have 2 payment plans, and you do make a member reasonably aware of what the different pricing options are, and that they will be paying more by paying up front, that's all great. And we can think about, we can get the benefit by reducing our sales VAT on the VAT return and claw back an amount of VAT that we paid historically. So my final point on that one, the final bit of criteria, which is quite important, which is that you, for your VAT accounting, you cannot be on the flat rate scheme. You need to have very important. You have to be on standard normal VAT accounting. Yeah,
because a lot of gyms are in that under that threshold. For a lot of small gyms under that threshold is fortunately, I think with ministry we went flat rate for about 6 months, and then we were like, oh, just about to make some money. Oh, hello, here's standard rate.
Yeah.
Oh, okay. Cheers. Thanks a lot. But,
Yeah, exactly. That's the reason for that is that under the flat rate, you have opted to tax everything that you've sold, whether it be credit or anything else. You're opting to tax that at a lower flat rate. So in HMRC's view, you've already taken the benefit by paying less in the past. So any businesses that have been on a flat rate scheme or are currently on a flat rate scheme, the periods at which the flat rate scheme has applied, there is no opportunity for a retrospective exemption.
Yeah. So there does have to be a bit of a calculation there, because we are much better being on the standard rate scheme, because obviously we claim all our VAT back off everything. Whereas with flat rate, you can only claim, you have to buy a capital purchase of £2,000 or something before you can claim back the VAT?
Yeah, there's pretty strict rules. So what you have to do, it's on an individual case by case basis. Again, it's coming down to working out what is better for your individual business. Is it better for me to just pay a flat rate, or is it better for me to go to standard and maybe take advantage of the exemption? So it's on a case by case basis. Probably for lots of small gyms and single sites, it might be that it turns out they're probably better off paying especially if their overheads are pretty low. It may make sense for them to be on the flat rate, but again, that's a decision for them or whoever their financial advisors and accountants might be. But I think the important thing to stress here, there's no opportunity for any periods where the flat rate has been opted.
Okay, great. Is there any other things we should know about before I open up for questions?
Yeah, the last bit on screen here. So this is quite a technical point, but it's actually very, very important. It's something that lots of businesses forget about, especially when we hand over from making the original claim and having that claim settled and paid out by HMRC. When we do the handover, it's the going forward where this sometimes can cause issues. So if you've got the exemption, if a business says, well, let's say 5% of my sales, so of everything that I sell in the business, so memberships and coaching and food and beverage and anything else thrown in, so everything that I sell, if 5% of what I sell is VAT exempt, so let's say the finance element or the finance charges equates to 5% of your revenue, then in theory you should reduce your input VAT, so the VAT on your purchases, you should reduce that by 5%. Because if you're not paying over VAT on 5%, then you shouldn't really reclaim VAT on that 5%. You can't have it both. Basically, you can't have your cake and eat it. So
to be clear, this is not, so in terms of the 399 membership, all that would not qualify. It's the £81. That's,
exactly.
Yeah. So that portion, that's what should be.
That's right.
5%. Yeah.
Yeah.
I know my accountant has been very hot and it's causing them a lot of stress on that, but we are thankfully, we're doing all right.
Yeah, exactly. So if you apply this exemption, you'll be what's called a partially exempt business. Just like a bank or an insurance company, they have commercial activities which are subject to the standard rate of VAT. And they have activities that are exempt from VAT. So what these businesses have to go through, you have to apply. You have to do a partial exemption calculation for every VAT return that you put into HMRC, and then do an annual adjustment or annual recalculation for your annual period to make sure that you don't have to do this restriction. Because at the highest level, if there's, in my example, if 5% of everything you sell is exempt from VAT, then in theory, 5% of everything you buy should be restricted. But it's not as simple as that. There are lots of rules that you can make use of here with partial exemption, where we can go through a methodology where we can apply what you buy into different buckets and put them in different pots and say, right, we've got everything that's associated with all of your fully taxable income and revenue. So things like if you buy the gym equipment, you can only use the gym equipment to have the gym membership, so you can fully reclaim that. If you buy in kind of computer software to calculate this finance charge exemption, then an element of that is made for using for making taxable supplies. An element is for exempt supplies. So you have to do that apportionment, and you could only reclaim 95% of the VAT on those costs. So this is where it gets quite detailed, is that where you make a VAT reclaim an application for HMRC, on the one side, you can say, right, I would like back £11,000. And then HMRC will say, okay, right, I can see you're entitled to £11,000 on the VAT that you've overpaid on your sales, but show me that you don't have to restrict or don't have to reduce the VAT on your purchases. And so what we have to do is go through a process of identifying all those different income sources and put those in different pots, and then link them to what you've purchased. So it's kind of a bit of an involved process, but for almost all businesses that we've worked with, there's been no restriction needed for their input tax. Yeah. So they've been able to fully take advantage of reclaiming all of the VAT that they've overpaid on their sales, and make no restriction on the purchases VAT. So
this is why it's important to have things like day passes, which will rack up your sales, but they're not reclaimable. Things like short term, we have like 3 months payment. People can buy like 3 months. That's obviously not exempt. People can buy 2 weeks. If they all these things are not, they won't be covered by that. So they bump up the one side so that the reclaim. So it's important to have these other things, although they might not be viable from I want people to join for a year point of view. They actually help bump up your one side.
Yeah, exactly. Yeah. So there's lots of different angles to this, and so that's really it's not straightforward as saying, right, what's my total revenue for gym revenue for those members who do qualify, and then take 1/6 of the excess as your overpaid VAT and bunging that in. There's a lot of kind of detail and methodology behind those claims, mainly because when you put something into HMRC, what you want to make sure is that it's all correct, and that you don't make a mistake, or the HMRC don't ask a question and it actually turns out that you haven't done something that you should have done, because that's when you start getting into unwanted questions and unwanted territory around audits and other such stuff.
Yeah, I've had a VAT audit. It's they're all nice and friendly until it comes down to certain questions. And just a word of advice: if you get a letter from HMRC saying, "Oh, we'd like to come and have a chat to you," make sure your accountant is there with a file like that, full of all your stuff to give them, because that's what mine did. And they thought they saw an issue, and we'd addressed it before they got there. Perfect. But they tried to fine me about £4,000. And thankfully my accountant was like, no, we've addressed that about 2 or 3 months ago and it's all sorted. So just make sure you've got your accountant with you. Don't sit there with HMRC and just
try and answer
their questions as helpful as you can be, because it's like going into a police interview without your lawyer. Don't do it.
Exactly. Yeah. So it's like, if there's only one bit of advice, if when it comes to audits and it comes to complicated issues like this partial exemption, don't try and dabble in it. You can come a cropper fairly quickly. So one of my things would be takeaways here is, even if you don't work with us on things like this, if there's one thing to take away, it's if there's a technical issue, seek the proper advice. That's always, I don't try to open a gym and dabble in that. It's stick to
don't open a gym, mate. You'll hate everybody by the end of it. So we're going to unmute everybody, but there is a question from Simon, which I'll read out because it's. Sure. Are you got access to the chat, Ryan?
Yes. Okay. All right, let's have a look.
There's a question there which I think you could probably read and answer. And I think everybody can see the chat, so if you want to open the chat box, you can see it.
Okay.
So for the purposes of the video that we're recording, the question is: Hi guys, we run a small group PT gym, so not a huge amount of members compared to a commercial gym. We still have around 100 members and do a couple of upfront offers for 12 months, which costs around £1,500 at the time of the year, which we normally get 10 to 15% of our client base to do. Our first VAT return is coming up, so now we are new to VAT. Can we still apply this loophole in our situation now and in the future? Okay, Ryan, over to you.
Well, in theory, yes. If there's nothing stopping you from doing anything going forward, if you would judge the fact that you do have all of the criteria that we talked about earlier in place, that 12 months is a contracted period. There is a contract and it quite clearly says that you have an initial term of 12 months. And if those members who don't choose to do the 12 months, they pay more than £1,500. So if you do those types of things and you explain that quite clearly to those members, and this is one of the things that we found recently actually, is that you can prove that to HMRC. So you have some form of pricing sheet or something that's written down, ideally with a date of operation or a version number that's been in circulation in the business. Then in theory, yes, you could probably apply that going forward.
Cool. So I'm just going to unmute everybody. So if they want to ask a question, they can.
Yep.
So I've just sent a thing to everybody. If you want to unmute, you can, and ask a question. Just one at a time, please, if there are. So I think we've got Ben and Simon still here. Simon, does that answer your question? You might have to unmute your thing. It's still showing as mute.
Yeah, that's really helpful. Thanks. I'm going to send that sort of to our accountants and then see if we can apply it going forward. Hopefully save a little bit of money.
Yeah.
So I was completely unaware of this. So anything we can save at the moment with the cost going up will be helpful.
Absolutely. Yeah. It's so I think if you look at that and think, well, yeah, what am I putting before members? What does the contract say? And is it demonstrable to HMRC in the future that when they ask the question about why are you exempting this income? And of course, you'd have to communicate to your accountant or whoever does your VAT return as well, that they have to then be aware of this partial exemption as well. Make sure that they factor that in to their VAT return computation. I'd imagine if it's only a very small part of your business, then there's probably no issue, but you have to actually go through the motions to actually show HMRC that you've done the partial exemption calculation, and then you can prove that you fall below what's called the de minimis threshold. So it's an immaterial amount of VAT that you would in theory have to restrict.
Okay, cool. Thanks.
But if you're interested, I'm sure I can send Tom in an email a couple of links that for the technical elements that your accountant might be interested in. So, for example, the public notice where HMRC clearly advertise in Notice 7015, paragraph 5.9, I think, deferred payments, and it quite clearly says there, as well as there's the VAT manuals as well in the finance manual 3170, where it actually explains this in quite good detail.
Excellent. Yeah, I'll make sure that goes in the video notes as well. And
yeah.
In the group. Yeah.
Yeah, you can have links there. They're publicly available on the HMRC website. You can get links to both. And it's quite handy to have. So if you are going to do it, Simon, putting it into your prospective VAT return, it's probably a good thing to have a link or pull off the page, do like a print screen or save it and putting in your VAT folders to have a file note to say why you're exempting this income. Because in 5 years' time, if you change accountants or you do something else and you get an audit and you're thinking, why did I do that again? What did that guy say? So it's quite handy to do it now.
Yeah.
And
thanks.
Can you give that PDF that you shared? Are you able
to,
I
can do that.
So I can give that to people so they can have a read of and show it to their accountants or whatever. What I would say is that when I spoke to Ryan initially all those years ago, when I spoke to my own accountant, they are not tax specialists like what Ryan is. He's very specific on the knowledge he's got. My accountants are very good, but they said, yeah, probably, but that's not something we specialize in. So it's quite likely if you go to your accountant, they'll go, I don't really know about this. So it's worth maybe even, Ryan, obviously you're available for, initial chat or whatever, I mean, I think what's the fee you take as a commission, isn't it, of whatever you get back?
20%. Yeah. So we do 20% for the retrospective element. So if you're entitled to, say, £50,000 of VAT, then there's 20% of that 50,000. It's it's all on a contingent basis. It's kind of a sideline to our main business, and that's why we're able to do a contingent on that. The one thing I would caveat to that, and it's not in the PDF because it's a little bit older, but one of the notes I would say is that we do ask for a minimum sum now, because cost of living increases and the time and resource that it goes into doing these claims. Anything below 5,000 it's just not economical for us to do. So if you're thinking about a 5,000 minimum,
that's not 5,000 your fees, is it? That's 5,000.
No, it's our fee now. We put that in place recently,
fine,
because
that,
which it didn't apply when we were working together, but because we just haven't, basically the time it takes, because as well as HMRC getting tighter on how they're applying the exemption, they're also taking much longer to approve claims, and they're asking more questions. It takes a lot more meetings, a lot more time, and so the resource on the business for us is why we've had to put in place the kind of a minimum amount. So that equates to around about £20,000 of VAT recovery.
I mean, even from my perspective, I can't remember what the actual total figure was. I know it's about 11 grand, but even from my perspective, like if your fee was £5,000, I'm still getting £6 grand back, which I didn't have before, and I wouldn't. But it's not the initial claim, is it? It's the moving forward money.
Yeah, exactly. And if you've been applying it for, I don't know how many years now, it's quite some time, 7 years, something like that. So
now we've got all our memberships in order. I think the VAT, I won't say it on camera, but it's sizable per year, what the VAT, the reclaim is. And what we've reclaimed over the years is multiples, massive multiples of what we paid you initially to do the thing. Exactly. So that's what people need to remember. It's not I've got to pay this much up front or whatever. It's what am I going to be able to claim 10 years down the line, which I wouldn't have had before with these things in place. And that's really important. It's looking at the long term of what am I going to claim as my business grows.
Absolutely. Yeah, exactly. It can be sometimes a small investment up front, but the payoff over numerous years, as you've just said there, that's what you've really got to look at. So as you say, any money in your back pocket that you didn't have before, it's kind of all upside, really, isn't it?
Yeah, and you can buy new kit, whatever else. I think we invested in a whole ton of new kit, and that brought more members in, so more VAT scores. Awesome result. Simon, I think you were muted, so you can talk.
Oh yeah, sorry, I forgot that. Yeah, I just saying. Obviously, I'll bring this to our accountant's attention, and then if they're not up to speed on it, then I'll reach out to you and
sounds good. Yeah,
give you a shout. Okay. Whatever, if you put your email address or put it in the group.
I'll put it in all the notes, mate. So everyone can access it. Yeah, that's fine.
All right, cheers, mate. Cheers.
Yeah, we do. This is these kind of one-off claims. That's only a small part of the business. As I said, we have a whole compliance function and a whole advisory team as well that look after regular clients as well. And we have some clients who we work with on an advisory basis like this as well, where we advise other people's accountants, and we advise business operators on about how to do things like putting things in place prospectively. So the retrospective is only one element, but there's also the prospective element that we work with on a project basis or an hourly fee, just as and when you need it. So we're really flexible. So we help clients in any number of ways.
And Ben, have you got a question? I think we're coming up on the hour. So I know, Ryan, you've got a little bit of time, but have you got an appointment in 2?
No, it's okay.
Okay. So Ben, have you got a question?
Yeah, I do. So with us specifically, right, we've got about 1,100 members, but a large chunk of those are annual. The thing with our annual fee is we do change it throughout the year depending on what we're trying to do. So at this time of year, we need to drive more DD payments because we generally see the most attrition. So we tend to raise our annual fee. So for example, right now it's $420 for the year or $38.95 per month if you take a 12-month, which is only about 47 quid difference. But if we come to November, Black Friday, we might be selling at $295 for the year because we want to drive cash flow then coming up to Christmas. How would we go about calculating the difference with that in mind?
It's a good question. It's something that's come up numerous times, actually. There is dynamic pricing in the industry, as you've just explained there, for whether it be seasonal or, you know, certain business promotions. It is tricky. How, I mean, I can only speak in generality, really, because I don't know, you know, enough about your business, or, you know, what you put before members, but it can be quite difficult. I would say that you probably need to be able to demonstrate the fluctuations or the promotions. So where you do have a Black Friday sale and there's a new price, you have to be able to show to HMRC that that was the price and that members signed up at that price. So whether it's a version control, whether it be a marketing campaign that's managed by, you know, in-house or externally, there has to be some sort of contemporaneous data that you can put before HMRC should they ask, well, how do I know that that member was advertised that rate? Because for all they know, well, okay, they could have been advertised the 299 rate, but who's to say they weren't actually advertised the 485 rate? So you have to be able to demonstrate that in some way. I mean, that's a tricky bit. It's quite difficult. HMRC, they do have quite sophisticated tools for website data mining, and so they've been able to actually go and produce extracts and pages from websites that customers told us in the past, said, yeah, we didn't say that, or we didn't say there was no contract, or we didn't say this. And HMRC actually brought it up and said, well, actually, that's not what your website says in 2015 or 2020. So they do have sophisticated tools in order to kind of data mine and track these things. So it's there needs to be some way, whether it be maybe email scripts or telephone scripts, if you have any like telephone operators or in the club who are doing membership outreach. They've asked for those in the past. Those can be dated and kind of put into your file notes. So you kind of have to kind of get this body of evidence should HMRC ask in the future. So there's no one definitive way, but my recommendation would be is to try and capture that as it happens in some way.
But then, so we could do that because when we've got evidence in our membership platform of what people have paid at what times, that's quite simple for us to get out. I suppose the question really is though, how do we calculate the difference? Because if we're doing that on a membership by membership basis, that's an enormous undertaking.
Yeah, it is.
Or can we calculate an average?
No, you can't. No.
Oh Christ! Okay.
No, exactly. That's why it gets very difficult. Yeah, that's why it gets very difficult. And one thing we haven't talked about here is how the mechanics of how you actually do this. Your question is, unfortunately, I would say it's behind the paywall. It's kind of the thing that it's our IP. It's how we go about tackling these things. And there are lots of different ways you can do it. It's highly bespoke to each business. It's about which membership database you use, what goes through the direct debit run. There's all sorts of these different things.
Yeah, the only way I can think of doing that is writing some software to pass all the information, but I don't really want to be doing that.
Yeah, it's tricky. Okay. Yeah, it's difficult. Yeah.
I mean, it's probably worth it for us because I think based on what Tom said, our VAT reimbursement might be something like 11 or 13 grand per annum. So it's quite substantial. Yeah. So we'll have to have a look. Cool. Thank you.
Okay. Oh, and the final question I had, Ryan, was obviously I in my group there's gym owners as well as coaches. So coaches sell. So for example, my coaching, I might sell 3 months for X amount, but people can pay per month. And in my monthly, if they chose to break down, let's say it's 2 grand for 12 months, which is sort of what it is, but people can pay in installments, but that actually works out, I think, about 100 quid more, something like that. Is that also, so if I was VAT-able in my coaching business, which I'm not, but if I was, would these rules apply as well?
Yeah. In our view, it's not only the gym membership. We're talking about a subscription in some way. It's about where you have those key criteria of an annual contract, 2 payment methods, and it's been advertised in a reasonable way.
Does it have to be annual, or can it be like?
It has to be annual.
Has to be annual. Okay.
Yeah, that's why quite often the 3 and the 6s are quite popular. And they have been quite popular in the past. But HMRC have kind of they've taken a bit of an odd view, because in our view, actually, it didn't make any difference whether it was 3, 6, 9 or months. But in their view, they're basically holding the line at 12 months.
So say, for example, if a coach had a 12-month package, which was X amount, but if you paid in installments, it was, X plus whatever.
Yeah.
They would still be able to apply that rule if they were VAT. So coaches who are doing a lot of turnover would be able to apply that rule if they're VAT registered.
In our view, yes. I think as long as they have those elements in place, I think that's certainly legitimate, and they would have a reasonable grounds to explore that too. Yeah.
Yeah, that's interesting, because a lot of people sell like online courses now, and you can
things like online courses, things like that.
Online course is 12 months of subscription to a Facebook group or whatever else, and it might only be like 3 months, but you say if you had the 12 months, but you had 12-month access to the Facebook group and access to you as a coach, that would be potentially something to look at.
Yeah, absolutely.
Oh, cool. Well, so I think, unless someone's got any more questions, I think that's a wrap. Thank you very much for coming on.
Thank you very much. Thanks for having me.
When I have a guest on, I always say, give us your Instagram. So I don't think you have an Instagram, but how's the best way for people to get in contact with you? And I'll just put a thing up afterwards.
Yeah, I think our website, www.rbcvat.com, is probably the best way. LinkedIn as well. I can send you the details of my LinkedIn profile as well. No one wants to look at my Instagram. And the VAT world, I think maybe our customs guys or our freight guys maybe have an Instagram account, but certainly no, LinkedIn and the website, they're probably the best way.
Great, yeah, send me that and I'll put it as a thing underneath. Okay, brilliant. Thanks for coming on, Ryan. I really appreciate your time, and hopefully people who watch this video have had some value and are going to save some money in their business as well, which is also very good.
Absolutely.
Brilliant. Thank you very much.
Okay, thanks guys. Take care.
Cheers. Thank you.
Cheers.
Thanks. Bye.